Greetings, empowered investors. Welcome to episode 2311. We got a great show for you today. I'm sure you will learn a lot of stuff, but let's first look at one of those hotly debated political issues. Yes, you know what that issue is. No, it's not the person. It's not Donald Trump, but it's one of his policies. And let's just take a look at that for just 30 quick seconds before we get into some of the meat of today's show, as we are going to talk about being the boring investor. Yes. Have you ever been praised for being boring? Well, it might be a really good thing. We're going to hear more about that with our guest in just a few minutes. So for all of the haters and the doubters, you must just look at the customs revenue and how it has massively increased. Yes, up to $22.3 billion, the highest in many years, maybe the highest ever. It's probably the highest ever, but it's certainly the highest on this chart, which just back in 2015 was under $4 billion. So that is a significant increase in revenue. It's certainly not going to solve the government's deficit and debt problems, and it's not going to replace your income taxes, but it is much higher than it has been in the past. So just wanted to share that with you. Tariffs, I know that issue is so hotly debated. Okay, so, the real estate market, it's getting pretty boring. I get it. It's getting pretty boring. But I just want to remind you of what we are looking at in the future. We already know we have a big housing shortage, but we also know that we have a huge decline in demand destruction because of the high cost of money. But that money is almost guaranteed to get cheaper. I mean, I would bet 99% we are going to see this money get a lot cheaper. I mean, think about it. The inflation problem has gone away. What could Jerome Powell, our Federal Reserve Chair, what could his excuse be for not lowering rates at the next Fed meeting? I mean, the inflation threat has disappeared. What is he going to say? I hate Trump, and so that's why I'm holding out and making everybody suffer with rates higher than they need to be? No, it's not going to happen. Rates are coming down. So we look at this chart that I am showing for those of you watching on video. It is a mortgage sensitivity chart. It shows buyers' power based on interest rates. And this is not new. I have shown this to you before, but we did our own research on this. And if rates drop by 0.5%, that's another 2.8 million people who can afford the median price home. We only have about 760,000 homes for sale, according to the Altos research. If only a third of those people come into the market, they will completely wipe out the current inventory. So inventory must massively increase, or we will have bidding wars. I mean, it's just so obvious, as plain as the nose on my face. Yes, it is. Okay, we go down to another 0.5%, 50 basis points more, 5.4 million new buyers in the market. We go down 1.5%, we get 7.7 million new buyers that can afford the median price home. I mean, just think about it. Wow. It's staggering. This is the thing. I remember when I was struggling in my other business years and years ago. This was maybe, 25 years ago. And I remember this terrible thing happened to me. And it just was devastating. And it was right around the time of 9/11, which was already devastating. But then I had another devastating thing happen. And guess what? A friend of mine, a good friend of mine, said these key words to me, and I'm going to share them with you now because they are really good words to think about as investors. He said, Jason, keep your eye on the ball. And you know what? I followed that advice because you just focus on the fundamentals. And when you do that, without getting all emotional, without getting all freaked out, you just focus on the fundamentals. You show up every day, you do the right thing, you manage your properties, and the winds of fate will always work out in your favor. One of the things I used to say to my realtor audiences years ago, this was back in the 90s when I used to train real estate agents. I used to do big speeches and stand on big stages with huge audiences and train realtors. And I used to say the secret to success is staying in business long enough for something good to happen. staying in business long enough for something good to happen. That is the secret to success. And you got to think about that as an investor too. I know it's a mild time. It's just kind of a blasé time. Real estate is in the doldrums. Appreciation, very moderate. Some markets cooling and going negative. About, what did I read the other day? About 14 of the 80 top metros in the country have slight depreciation in prices. The rest only slightly appreciating. Over the last trailing 12 months, it's about 2.7% increase. Nothing to write home about. Rents flat. So it's just kind of a boring time. But today's show is about the boring investor. You're going to love our guest today. He's really good. All right. So note investing, that's another opportunity for you. If you want high returns and really, really passive investments, the notes can be a great opportunity for you. We've got some very easy note investments where you can earn up to 12% annually. Just a good place to park your money where you're waiting for the market to change. So check that out, jasonhartman.com. In the properties section, we have a section on notes where you normally look at properties. We have the properties there, but we also have note opportunities where you can buy mortgages and you can be the bank. So check that out or contact your investment counselor, 714-820-4200, extension 2, and we can talk to you about owning the paper rather than the property. All right, let's go ahead and get to our guest today, and let's talk about being the boring investor. It is my pleasure to welcome a returning guest back to the show, and that is my good friend, Paul Moore with Wellings Capital. Paul, how you doing?
Great. How you doing, Jason?
Good to have you on. And today I know that you want to talk about a topic that I think is a great topic, especially in today's market. It's entitled The Boring Investor. And investing is not really that exciting. Speculation is exciting. Yeah. Gambling is exciting. But real investing is sort of the Warren Buffett style investing. You just put your money in, you consistently invest, and you get good, solid return on investment over time. And I think that's what you're alluding to with a boring investor, but correct me if I'm wrong.
That's exactly right. When I sold my company in 1997, and I really thought that I should get the same thrill out of investing that I got out of being an entrepreneur. And boy, was I wrong. I made a lot of mistakes.
Yeah. Being an entrepreneur is much more busy than investing, right?
Yeah. Absolutely.
Absolutely. I agree completely. All right. Good stuff. Well, take us through the boring investor.
All right. Well, this was never me. I was always this type A, highly driven, highly charged guy that always wanted to be active. And when I sold my company, I had a couple $1 million in the bank in my early to mid 30s. And I was like, I'm a full-time investor now. And I thought I was a pretty cool guy. And I was not an investor. I was a speculator. In fact, I call myself now an entrepreneurial investor. They love the thrill of the chase. They stay up in startup mode. They get a rush from the process. They get a wide but never deep knowledge of anything. They really should be called speculators, and many of them may live in a mansion or work at Walmart after retiring. And there's nothing wrong with working at Walmart, just to point that out. But it's not where most of us plan to spend our retirement. And I've found since that there's a great joy and wealth building potential in being a boring investor. So let's talk about that. What's that look like? Well, boring investors attain true wealth. True wealth, and you're well aware of this, Jason, you talk about it a lot, is having assets that produce cash flow. Warren Buffett said, if you don't learn to make money while you sleep, you'll have to work until you die. It's sort of that, that quadrant that we hear about from Robert Kiyosaki, where our money makes money. Paul Samuelson said it best. He was the first U.S. economist to win the Nobel Peace Prize. And he said, investing should be like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas.
Right. And adjust his $800 statement for inflation.
Yeah, right. Yeah, that was 2005, I think. So yeah, for sure. So boring investors attain true wealth. Boring investors enjoy real freedom. I used to joke around, Jason. I used to say, entrepreneurs have tons of freedom. I'm free to work any 80 hours a week I want.
Yeah.
And I thought that was really funny, but you know what? It wasn't funny for my kids. It wasn't funny for my wife while I was burning the candle at both ends, working nights and weekends. And I found out later that boring investors, we don't keep trading hours for dollars. We don't have to worry about the price of our GameStop or Bitcoin or crypto or whatever. There's nothing wrong with that stuff, but we don't have to worry about it. Boring investors have freedom from toilets, tenants, and trash because you got somebody else to do that work for you while you collect a check. And that's what you're so good at, Jason. It's freedom to use your time and money to make a difference in the world, and freedom to stop agonizing over every financial decision, because boring investors enjoy real freedom. Boring investors avoid hidden costs. I've got a friend named Kevin, and Kevin actually was just agonizing day and night over his stock options because he was part of an IPO and he was constantly just chained to the stock ticker. He started losing sleep over it. It messed up his relationships. It messed up his work. And for all that excitement, he didn't make a penny more. In fact, he lost health, he lost relationships, he lost productivity. And now he actually sails in the Puget Sound near Seattle. And he's got his money in ETFs. He's got his money in passive commercial real estate investments. And he's enjoying his life a lot more because he's avoided the hidden costs of trying to be an active entrepreneurial investor. Boring investors lose money and make a fortune. Jason, remember my podcast called How to Lose Money?
Yeah. I remember being on that show.
Yeah, right. Well, boring investors realize that every mistake is an opportunity to learn more. Now, what I didn't know when I was the host of that show was that Charlie Munger, who Buffett and Bill Gates said was the most brilliant investor on the planet, Charlie Munger said his main focus was, what do you think it's going to be? Is it creating complex algorithms? Is it creating really, really heady things to try to figure out the most brilliant investment strategy? No. Munger said his main goal in life was to avoid other people's mistakes. He read about 500 books a year, and his main goal was to avoid making the same mistakes that he and other people had made. And he took every lesson was from somebody's mistake, including his own. In fact, he stood up in front of 40,000 Berkshire Hathaway devotees and he said, "We were horses' asses. We failed you." And he talked about all his mistakes and he rubbed his own nose in his mistakes. And he said, "But we will try not to do that again." It's just a wonderful thing to learn from your mistakes. And boring investors do that. Boring investors realize they might be wrong. Chris Davis of Davis Advisors has a wall of shame in his office where they frame the stock certificates of their worst investments ever, like AIG. And they have bullet points underneath the investment and say, here's what we did wrong in making this decision. And we realize we might be wrong on tomorrow's investments as well. Let's think hard about making sure they're not up on this wall in the future. And they basically do what they can to avoid that.
I think one of the interesting things about these last two concepts is that when you're a boring investor, you have time to reflect on mistakes, right? Where the entrepreneurial investor, as you will, and we're saying that in a negative way, right? It's bad to be an entrepreneurial investor, is sort of moving so quick that they're like looking for the next pot of gold at the end of the rainbow. They're just moving so quick. They never reflect on anything. Their ship is always about to come in, right? It's going to be some big life-changing deal rather than the slow and steady wins the race. The old fable, it's the tortoise and the hare, people. Just go along, and the progressive, like Earl Nightingale said, the progressive realization of a worthy ideal. And that's what it is. It's a very progressive type of process, but that isn't sexy, right? The person that just shows up every day, does the thing, doesn't get controlled by his or her emotions, doesn't have knee-jerk reactions to things. There's going to be problems. There will be bumps in the road. There will be discouragements, frustrations. There will be all sorts of things. But the boring investor, I think, has the ability to sort of regulate their emotional reactions to things, right? And if you're looking at their emotions, and if it's like a heart rate monitor, right, it would be flatlining. It would have minor ups and downs, or it'd be like a linear market, right? I talk about investing in linear markets. It has small ups and downs, but not major ones like a roller coaster, not like a cyclical market.
That's exactly right. Boring investors have the time to slow down because they're not making lots of decisions in and out. It's incredible how few investments Berkshire Hathaway has made over these last 60 years. Yet, Jason, did you know that if you took Buffett's stock, Berkshire Hathaway, and cut it by 99%, in other words, if it was $100 a share, you cut it to $1 a share, it would still wallop the S&P 500 over 60 years. Isn't that incredible?
Yeah, it is.
That's what boring investors do. And by the way, I don't know how Warren Buffett has done it. His life has been so boring. I don't think most of us could even spend a week in his shoes. His life is so boring.
Isn't it interesting? The formerly richest man in the world, and now still one of the richest for sure, has a very modest house that's worth like $800,000 or something. No big deal, right? And just lives this very linear, conservative life. The only extravagance he has is his jet, which he calls that indefensible, right? Because there's really, really it's ridiculous. He's just a very conservative guy, right? And he just shows up every day and does the work, and it works.
It's really incredible. It's very true, though. Boring investors invest in boring assets, like self-storage, 4 pieces of sheet metal, some rivets, a floor, and a door. Or even worse, mobile home parks. People never even thought about mobile home parks, but the few who did over the last 5 decades turned their nose up at them. They look down their nose at people like Sam Zell, the possibly the most successful real estate investor in history, who amassed 158,000 mobile home park pads before he died a few years ago. I like to tell the story of boring investors who invest in the gold rush. It sounds contradictory, but what I'm talking about, of course, are not the people who ran after gold and only 3% found any, and many of them died on those slopes. But I'm talking about the people who sold the picks and shovels and the dog sleds and the hotel rooms in Alaska that actually vacationed on those same mountains where these other people bled and died, chasing gold and speculating. And this is the value of your show, Jason, and this is the value of your program. You're teaching people to invest in the gold rush, but in a smart way, not in going and chasing, flipping your own houses on the side, which hardly ever works for most investors, or chasing, trying to be like the HGTV star, but instead just investing passively in these homes that are just sending a check month in and month out and having someone else do the management and maintenance. It's the best way to invest, though it's not giving you the thrill of the chase, right?
That's so true. I have talked to you many times about my experience with a gold dealer years ago, and the one major flaw of precious metals investing when it comes to gold and silver, and that is that it does not produce income. But what if you could make gold and silver work for you just like your income property? Well, you can. Our new sponsor is Monetary Metals, and people who own gold as a hedge against inflation like that feature, but the gold just sits there. It's collecting dust, right? But with their leasing program, you can actually earn a yield. So check out our new sponsor, Monetary Metals. And it's monetary-metals.com/Hartman. And you can learn more about this opportunity. Instead of paying to store your metal, you can now get paid to own it, earning passive income paid in more ounces of real physical gold every single month. With Monetary Metals, you can earn up to 4% in their leasing program immediately upon funding your account. Yields are paid monthly in ounces of physical gold or silver, which you can get in addition to any price appreciation from your gold and silver over the holding period. Fund your account with metal you already own, or purchase it from them at less than 1% over spot. I liked this product so much, I signed up myself. Gold and silver are a great insurance policy. Again, I never really treated them as an investment. They were just kind of an insurance policy. But now you can earn a return of up to 4% on that insurance policy. So it just got a lot better. Visit monetary-metals.com/Hartman and learn more about this program. You know what's interesting about this is that when you see these infomercials on TV, I'm always kind of envious of those guys, those gurus doing that, because they have all these testimonials from these people that say, I was broke and I did my first deal. I made 60 grand in one day. We don't have any stories like that. It took us a long time to get testimonials from clients that had to invest and do the boring thing for several years before they started to see, wow, this is incredible, but it's just so reliable. Being the boring investor is the reliable investor. Like if you want a sure thing, there's no sure thing, right? But it's as close as you can get, is to just do the boring things, show up every day, do the work, tolerate the frustrations, tolerate the problems, and just keep moving forward. And the momentum of that is incredibly powerful.
Yeah, it really is. It really is. Another concept is boring investors diversify. You can put all your money into one investment, and even if everything's solid the day you go in, you don't know what's going to happen. You don't know if there's going to be a hurricane or if there's going to be a hired CFO that becomes a fraudster. Diversifying means spreading your money out over a lot of deals. And again, this is something you do so well, Jason. You help people spread their money out over different geographies, different houses, different streets, different neighborhoods, and it allows you to diversify. Warren Buffett said diversification's for people who don't know what they're doing. I scratched my head at that. I said, what are you talking about? Wait a minute. Berkshire Hathaway is the most diversified company on the Fortune 500. And I think what he was talking about is diversification within one company. So if Dairy Queen decided they wanted to foolishly diversify into paper mills, into ink printing so they could print their cartons, and even into timber, so where they could create the pulp and paper to do their cartons and cups. And that's stupid diversification. Of course, Dairy Queen doesn't do that.
So I have a comment on diversification, because it really, you need to peel back the layers of this thought, right? I think generally speaking, diversification perpetuates wealth and concentration creates wealth, okay? I think generally that is a true statement. Right. But I think the way you want to do it is you want to take the most historically proven asset class, real estate, and diversify geographically, right? And that's what I say to people. Diversify geographically, be in at least 3 markets, not more than 5, and you'll have enough diversification because these markets do vary. They all have their own individual economies. Whereas you got one person who's putting their whole life into one deal that's going to be the deal that is the rocket ship, and that deal may well fail. And so you've got to be diversified, but do it within the right asset class, and that's the real estate.
Yeah, totally agree. Wellings Capital, we have diversification across these different asset types as well, self-storage, mobile home parks, RV parks, light industrial, and more, multifamily. And I think the point is, you talk about concentration and diversification. Concentration, we invest with people who are highly concentrated, like a self-storage operator who lives and breathes self-storage for 40 years, or an RV park operator who does the same. And then diversification comes from having a finger in all those. And of course, Berkshire Hathaway, Buffett has, I believe, full ownership or partial ownership in about 107 companies last I checked. So, and again, all of them are obsessed with their own thing. They're not all spread out as well. So this is an obvious one. Boring investors don't chase shiny objects. Investor extraordinaire. He's not a real popular guy, especially not with me, But he was a smart investor. George Soros, he said, if investing is entertaining, if you're having fun, you're probably not making any money. Good investing should be boring. Here's a kind of fun one. Boring investors are simpletons. Now,
Hmm.
Warren Buffett was deeply criticized in 1999 for not jumping on the
On
tech
tech.
bandwagon.
Yeah.
Yep.
He
And he
said
stood
when the
up.
dot-com bubble was happening, he said, I don't understand this stuff. I'm not going to invest in it.
Right.
And you know, he was right at the time.
He
Yeah.
was right. He said, I would rather invest in Wrigley's gum than
Yeah.
tech because I don't know where tech will be in 10 years. I do know how people will be chewing gum.
He didn't get seduced by all
Right.
of the talk about the new economy. You know,
Yeah.
everybody turned up their nose at all these traditional people that were doing real estate and doing, you know, what Buffett was doing, you know, Berkshire type stuff. They all thought they were like the losers, the old school. Well, guess what? I guess the old school won the day.
Yeah, they sure did. Munger, he said he was talking about the brilliance of Berkshire Hathaway, and he said, we look like we've found some kind of a trick, but we haven't really done that. It's actually quite simple. It's kind of a fun thought to think that the simplicity won the day.
It really is true. And you know, when I used to train real estate people years ago, I used to, you know, do workshops and train them on how I got my success and what they should do, right? And they would always come to me, Paul, with this question: what can I do to be different? What can I do to stand out? I want to do the best, most creative marketing ever. And
Yeah,
you know, there is an edge to that, no question about it. A little bit of creativity is going to help you. But the main thing is, and here was my answer to them: if you want to be different, be consistent, because so few people are consistent. That's what will make you stand out, is just
yeah,
consistency, right? Be there day in, day out, do your marketing consistently. Don't have the idea du jour and, you know, change your path every month, right? You've got to be consistent for a long time. That's what
right.
paid off for me when I was in traditional real estate, and it pays off for investors. It's the same rule.
Yeah, so true. Here's one that's kind of fun. Boring investors traded FOMO for FOMO, and they got JOMO. What the heck is that? Well, we all know FOMO. FOMO is the fear of missing out. I've got a little Bitcoin, and I did it for fun on the side. And Jason, I'm having so much trouble selling it. I need to sell it right now. I made a decision a week ago to sell it, and every time I go to do it, I think, oh, it just went up a little. Maybe it'll go up a little more.
I
Oh,
know, I know. That's so speculative. It's so hard to manage your mental
I
state with
I
that, you
know,
know?
and I know better. That's why I love real estate because I don't have a chance to do that. But basically, great boring investors traded FOMO, fear of missing out, for FOMO, which is fear of messing up. And
Oh,
that
interesting.
is what basically our company has just become obsessed with, trying to figure out what could go wrong. Let's make sure we don't do that. And what do we get out of that? We got JOMO, which is the joy of missing out. We missed out on a great investment a couple years ago. And I looked back at it. It was in Colorado Springs. And I looked back the other day at all the details that made us decide not to do it, even though it like tripled investor money. And I went, oh, yeah, there was this and this and this. And you know what? I had a little joy because I thought we were disciplined. We chose for good reasons not to do that. Now, it turned out it worked out well, but I got a little bit of joy thinking, as much as I wish we had done it, I'm glad we were disciplined and stayed with our process. Boring investors imitate patterns, not outliers. A lot of stock people have heard of Jesse Livermore. Now, Jesse Livermore, if you'd have been alive about 90 years ago, you for sure would have heard of him because he shorted the stock market right before it crashed in October 1929. He made about $100 million, which is $4 billion today.
Wow.
And a lot of people imitated him, and they invented something called day trading as a result. Well, unfortunately, every single person I know, Jason, and I don't know that many people in stocks, but every single person I know that has tried to day trade has failed. Every single person I know that actively moves money in and out of stocks fails. Same with Bitcoin.
But I'll tell you something, Paul. They had a good story one day and talked about how one day they made a fortune or one week
One
they made a
day.
fortune, but it just never lasts. It's like the gambler in Las Vegas, right?
Yeah.
They'll have a great run and then they'll just give it all back.
Yeah, it's absolutely true. And sadly, tragically, Jesse Livermore couldn't even imitate his own success, and he took his life 11 years later,
Oh,
around 1940. Jeff Bezos asked Buffett, he said, your strategy's not that complicated. Why doesn't everybody just imitate you? And Buffett said, no, no, nobody wants to get rich slowly. And it's just, that's a funny thing to say. Charlie Munger was asked about this, and he said, why do people think they should pick their own stocks? We don't design our own electric motors or build our own egg beaters, do we? And I just thought that was great. And again, it just promotes what you're doing. You're helping people buy passively, letting somebody else do the heavy lifting so they can focus on their life, their family, their day job, their career. And it's just a great strategy. Boring investors don't have a crystal ball and they don't pretend to. Peter Lynch says those who live by a crystal ball are destined to eat glass. And if you are trying to take things outside of your control and just betting on, interest rates going a certain direction, the economy doing this or that or whatever, if you're basing your investment thesis on things outside of your control that may or may not happen, it's a pretty risky way and a pretty good way to lose money. And I know that I made a lot of mistakes early on like that. Boring investors are really patient. Charlie Munger said the big money is not made in the buying or selling, but in the waiting. And of course,
hmm.
real estate investors do that really, really well. If we buy and hold something for many years, we're waiting a long time. Like you said, it took a long time to start getting testimonials, but over time, those are better testimonials, better stories, right?
Yeah, much better and much more reliable. Those people today are all still rich.
Yeah,
They never
right.
gave it back, you know?
Yeah. I know we got to land the plane pretty soon here, but boring investors say no a lot. Of course, Buffett again, he said the best investors say no a lot. The very best investors say no almost all the time. And Wellings Capital, our company last year, said no over 99% of the time as we passed on all but five of 745 operators and investments we took a look at. Boring investors invest in relationships. A lot of people who are on their deathbed, Lee Iacocca famously said, no one on their deathbed said they wished they'd spent more time at the office. I can't judge anybody who's failed in this way because I know I failed. I told you I have four kids, but man, they grew up watching me be driven, watching me work way too many hours. And now that the kids are all out of the house, I've learned to slow down. I've learned to be a boring investor, but honestly, I missed a lot of fun years with those kids. They're all doing really well. They love me, but I can never get those years back. I wish I'd have known this concept. Boring investors invest in happiness. Have you seen these studies, Jason, like from Harvard and others that say that globally there's a happiness satiation point?
Yeah.
And when they did the study 10 years ago or whatever, it was 75, $95,000.
Yeah.
Let's say it's
So
200,000. It
just
doesn't
invest that,
matter.
adjust that for inflation. And it's all that's the income number, but there's
Yeah.
also the net worth number, right?
Yes.
I don't know what that number is nowadays according to these studies, but I remember reading it in a paper magazine years ago,
Yeah.
and it was like 1.6 million net
Right.
worth
Yeah.
was more than enough to be happy now. That was like 25 years ago. So adjust for inflation, obviously, and, adjust the income for inflation too. But people are so misled. Money will not buy you happiness, folks.
Right.
Neither will poverty. Okay. But,
Exactly.
you only need like to get to a certain point, and then it's all just a game.
Yep, it's absolutely true. And so, I mean, if you're already making, let's say that happiness satiation level is $180,000. If you're already making 180,000, does it make sense to work 10 more hours a week? Does it make sense to miss your kids' games for that? Jason, the day you and I met for coffee, if you recall that,
I know we had like a 3 hour coffee meeting.
yeah, well, that same day, I also met some investors in West Palm Beach, and one of the guys there was driving a Ford Explorer, and he just seemed kind of boring. But I just knew there was more to his story. I said, "So what do you do for a living?" He goes, "I go to my kids' games and I flip a few houses." I said, "No, no, tell me
He's
more."
probably being modest. He's probably super rich.
He finally admitted to me that he was the former CEO of Home Depot, Ulta, and Michaels.
Wow.
And he had retired early so he could hang out with his kids more.
Yeah. Yeah.
And, I just think that that is such a beautiful picture. And what it reminds me of is this: boring investors invest in the unseen realm where there's apparently no return on investment. And I'm thinking specifically of a man that I hope you'll all look up. His name's William Wilberforce. Now, William Wilberforce had everything. He was 21 years old. He was elected to Parliament, and he was the youngest guy ever elected to Parliament. And he had a massive revelation. He converted his life. He quit all five of the big social clubs he was involved in. He realized the horrors of slavery, and he spent his health, his wealth, his reputation, the rest of his life until he died trying to fight slavery. And he was able to eventually, with a bunch of people that gathered around him, able to eventually cause slavery to be outlawed in the UK. It eventually spilled over into the Civil War and the outlawing of slavery in the US as well. William Wilberforce spent his life on the unseen realm, and apparently he didn't gain any wealth from that, but he's got a legacy that will last for eternity. And
Mhm.
so that's one of the things I want to encourage people to invest, to leave a legacy. One of the ways we're doing that, and we want to encourage everybody to look into this, is to look at this issue of human trafficking. Even though slavery was outlawed a couple hundred years ago, unfortunately, it is now one of the largest businesses on the planet. If you took the record profits of ExxonMobil, Nike, and Walmart, tripled those record profits, you would get the approximate profitability of human trafficking every year. So we encourage people to go check out our partner, AIM, AIM. That's aimfree.org.
And I have donated to this organization, by the way.
Yes. And Jason, I've so appreciated your partnership on this. Every year we try to raise money. This number here says Wellings has influenced, raise, and donate over 700,000. It's over $900,000 now that we've influenced for AIM, and we hope that people will check that out. It's boring because you're not actually going and rescuing slaves yourself, but it's a lot more powerful than anything we could do on our own to partner with an organization like AIM. So that's it,
Good deal.
Jason.
All right, Paul. Well, hey, the lesson is be the boring investor, because just be consistent. Do the boring stuff. Don't fall for the siren song of the sexy investment. It's going to, 10x your money overnight. It's just not going to happen. Look, one of the questions that I always ask when someone comes to me with this trading system for the stock market or whatever it is that sounds too good to be true, I ask, look, if this were true, why isn't everybody doing it? I mean, secrets like that don't last, right? If you could buy some piece of software that would trade stocks and make you a fortune, I mean, the stock market is infinitely scalable, right? So in that example, everyone would be doing it. I mean, there are way brighter minds, on Wall Street, people you never hear of that work for companies like Goldman Sachs, right? That do research all the time, all day long, people that work for Berkshire. These people, they would know about it. They would be using it. You would hear about this stuff. So the sexy stuff is almost always a scam, almost always,
Yep.
95% of the time. So just show up every day, do the consistent stuff. That's what works. And Paul, thank you so much for sharing this with us. It's really great.
Jason, thank you so much. It was an honor to be on here again, and I really appreciate your friendship.
Likewise, and keep in touch.